guys, welcome back. On this video, we are covering pulsex.com. This is going to be the second part of a three-part videos on pulsex.com. Can PulseX reach 1 cent? Well, this is what we're covering in this three-part series. Of course, we're going to make more videos about it, like comparing Uniswap to PulseX, which is the premier decentralized exchange for Pulsechain. Now, Pulsechain is a hard fork of Ethereum, and all your ERC20 tokens are on the other side as PRC20 tokens if you had any ERC20 tokens on your MetaMask before May 13 or into April. It's very important that you consider the supply, and this is what we're going to consider on this video. Now, the third video, look forward to it, is going to concentrate on the demand, because the demand and the supply is what sets the price here, okay? So if you go to DeFiLlama.com, I always like to say this, but if you go to the DEXs, you can see that PulseX is listed on rank number 9 on the total value lock rankings DEXs. So Uniswap is on the first one. You see, SushiSwap is number 6. Pulsechain is number 9. So that means this asset is being used right now, and we're getting out of a bear market. Now let's jump into the tokenomics. First of all, this asset has a max supply of 143 trillion coins. 90% of those coins, around roughly 128 trillions, are locked up on an OA address. Now, all the community believes in the founder and believes that this 90% will not move from this OA address. We don't expect any dumps. We don't expect any rug pulls. We expect this asset to remain locked on this OA address forever. Now, so we're going to concentrate on the total circulating supply. The total circulating supply right now, as it stands, is around roughly 10%, which is 14.3 trillion coins. Now, many ranking sites, CoinMarketCap and CoinGecko, and many market cap rankings sites, they list all the cryptocurrencies depending either on the max supply, the times the price, or the current circulating supply times the price. And for example, Bitcoin is his price right now is multiplied the price times the max supply, right? And that was giving the market cap of Bitcoin right now, as it stands, at $739 billion. Now, on Ethereum, it's by the circulating supply that's multiplied the price by. The price of Ethereum is multiplied by the circulating supply, $224 billion. On Uniswap is 4.7 billion, and is multiplied by the max supply. But on XRP, it has a max supply, and it's being multiplied the price by the circulating supply, not the max supply. So these ranking sites are very tricky. They could also list their tokens according to what they feel like it. That's why a lot of people that Hex.com was listed was gate kept, because they were using the max supply versus the circulating supply is what matters. But to investors, we don't really care. We shouldn't care about the market cap. On crypto, on stocks is different, because on stocks the market cap is kind of important to investors, because they can see how large this company is, and they could calculate according to the revenue they earn yearly or quarterly. But on crypto is a commodity. Crypto is property. Crypto is a different monster. That's why being an unregistered security, as they say, is not true. These are not securities, because we don't expect any profits from the work of anybody. So let's keep going further. So right now, so we're going to concentrate. So the total circulating supply is 10%, which is 14.3 trillion coins. Roughly around 1.76 trillion coins is on liquidity pools. Now, liquidity pools is what sets price, because these liquidity pool providers has to have two different coins to be trading against each other. So they have to, if they have to deposit 100 PLSX or 100 PLS Pulsechain and PulseX, right? And they could trade we could trade on their pool, and depending on how much supply and demand and decrease are on each side, that's how the prices are calculated here. So right now the market cap, they are going based the max supply, which is around $2.3 billion. But if you go and multiply the price of this asset by the total circulating supply, is what needs to be calculated for by $269 million. So it's very, very minimum compared to what they have this asset ranked by, listed by, or presented by. Many sites are taking this asset as a 2.3 billion, and it's not. Okay, so we're gonna concentrate on the burn. Okay, we're gonna leave the market cap aside for a minute. On the burn, it's been 175 days from its launch, May 13, which is roughly around 5 months and 3 weeks ago. This asset has burned about 537 billion of its asset, which is currently around 0.663 has been burned of the circulating supply, which is around 93.3 billion a month that's being burned. And this is a modest burn because we're not in the bull market. The more they use this coin, then we're going to see some different numbers on each month as burn goes up. And that would make this asset more scarier. And they're buying it basically and getting it off the market on every single swap automatically. A year from now, this asset could burn about 8% up from the total supply, which it'd be about 1.1 trillion coins being burned, which is roughly going to take that total circulating supply down to 13.2 trillion in circulating supply. And 2 years from now, it'll burn around 16% from the 10% of 14.3 trillion coins to 12.1 trillion in circulating supply. So the circulating supply will decrease over time. Now, remember, forget about the 90%, forget about the 128 trillion. We're concentrating on the circulating supply because we believe that that's the asset that's most likely going to be traded, swapped, moved around, and whatnot. That's why it's called circulating supply. So it's going to be dropping and dropping and dropping. And these calculations are based on today's monthly burn, like 93.3 billion per month. Like that's what has been burned so far in the last 175 days. If the bull market comes and more people utilize this platform, more burns are gonna be burned. So this number, the current burn rate, is gonna increase. It's gonna increase, and it's gonna make this asset more scarier. So the liquidity providers are gonna put less on their liquidity pools because they're gonna have less of it. Now I just want you to guys know about this, very important, that the market cap is a vanity metric to go by, especially in cryptocurrencies, because like I said, the max supply is being multiplied by the current market price, and many of these assets have a certain amount of coins that are locked away and be put away on an address that we don't expect it to move. Otherwise, it'd be a rug pull, right? Or there would be a scam. Now, nothing in this video being said is financial advice or should be considered advice. This is only for entertainment purposes and as well as facts and truth behind all this math here, because we're looking into the chain and we're looking into whatever happens to this token. Now, the auto market maker bot, it's what measures the liquidity pools and dictates what asset goes up or down, and they're trading against each other because of their order books, right? So right now, currently, there's a total supply of liquidity in dollars around $48.8 million in over 30 liquidity pools. Now, 30 liquidity pools means like there are 30 different pairs. Well, of course, with PLSX on one side, PulseX on one side, and then different ones on the other. There's around over 30 liquidity pools right now being put in. It's around 1.7 trillion tokens spread through those 30 liquidity pools, which is roughly around $48.8 million in dollar terms, right? Half of that liquidity, remember, is PLSX asset, right? It's around $24.4 million on PLSX and another $24.4 million on other assets that are paired with each other. So that's being calculated right now so far as a decimal 40188 at the time of making this video. That if you multiply that number, which is the current price of this asset, by the circulating supply, it'd be around $269 million market cap, right? So right now, the market cap for Ethereum is $224 billion, right? And this asset is inflationary. Bitcoin right now, the current market cap is around $739 billion, right? Uniswap is around $4.7 billion. I mean, we're talking about $269 million in market cap. Now, this is multiplied by the circulating supply, because that's what the people that are in this market, on this community, on this ecosystem of Pulsechain and PulseX should look into, because we believe that we shouldn't be looking at the OA for nothing. Okay, we should be looking at the total circulating supply. So that's $269 million market cap on this asset. Of course, on like I said, on many ranking sites, it's $2.3 billion, right? But it's not. To me, it's not. So now let's look into the future price. So the future price, we want to see this asset go up to 1 cent by 2025, in 2 more years. So we expect 16% of the burn will happen to the total circulating supply, which is roughly around 2.2 trillion coins off the market being burned, which it roughly leaves in circulating supply from 14.3 trillion to 12.1 trillion total in circulating supply. Now, if this asset, we want to see this asset go to 1 cent, there's got to be high liquidity being provided. Well, it will be. It has to be. Right. That's why with low liquidity right now, like Richard Hart said, it's the best time to invest when low liquidity is in the market, because once this market goes up, the liquidity is going to go up with it. And the more it's going to go higher, the more it's going to be strong. There's going to be more stable, the price, and it's going to increase the price to a point where it's going to take more liquidity to either pump this market or dump the market. So I expect this asset, if this asset has only 1 trillion coins from the total circulating supply into the pools, which right now is around 1.76 trillion in total liquidity on liquidity providers. But if you take away about 2.2 trillion on the circulating supply, you would expect the pool supply to decrease as well, to be, because liquidity providers are looking, they want to hold these assets too. They don't only want to make the incentivized token as a reward, but they also, or the liquidity pool token, or the LP token, but they also want to be able to keep some of their PLSX. So I would expect if the pool supply of PLSX decreases to 1 trillion tokens, it would take about like around 10 if you could calculate the price of 1 cent times the 1 trillion in liquidity pools, it'd be roughly around $10 billion in market cap. Of course, the liquidity pool, I did some calculations here. I don't think this is right, but I just want to throw this out there, even if it's right. If it's wrong, you guys leave a comment in the description below. What do you think? But, right now, the total liquidity, as far as millions of dollars, right now is $48.8 million. I would expect this total liquidity in dollars to rise, because all the prices are being paired with is going to go up too. And I would believe that the liquidity pool providers could go up to $25 billion on liquidity pools. It may be less. It doesn't have to be that much, because remember, it's about prices trading against each other. And you also guys got to remember too that there's a lot of money out there, and the only reason why we're seeing high interest rates is because they want to preserve the dollar, because otherwise the inflation would go up the moon, and we could expect hyperinflation in the United States, and we don't want that. So there's a lot of money out there that's going to be pouring into this market. Especially, we're going to talk about down the third part. I know that I'm doing some rants right now about the upcoming video, but if all this BlackRock and all these big investment firms start buying this asset at the spot price or launching ETFs on them, you can believe that this asset could reach 1 cent because the liquidity is going to be there. Now, so let's say the total circulating supply in a couple of years from now for this asset will be a 12.1 trillion PLSX circulating supply. To reach 1 cent, this price, the market cap, it has to reach around $121 billion. And that's a lot because Ethereum highest market cap on 2021, I believe, is around $571 billion. So yeah, 121 billion is much less, but we're talking about Ethereum here on 2021. I mean, that's a high market cap on Ethereum. Of course, the market cap for Bitcoin on 2021 was $1.8 trillion. So that's a lot. That's a lot more. But remember, market caps are vanity metrics. Of course, to reach 1 cent right now for PulseX, I'm sorry, it's around 531x. And that's a possibility, okay? Especially if this burn rate keeps going higher and higher the more this platform is being used. Now, so by 2025, this asset goes to 1 cent. And if you calculate the max supply times the 1 cent that we want to see this asset go by, it'd be $1.43 trillion in market cap if you calculate it by the max supply. And I don't think that's going to be it because not even Bitcoin in 2021 reached that high. So that's a little bit not possible. Like it's a possible, but like I said, it's only possible because people are not going to buy a coin or you're going to, can you imagine PulseX outperforming Bitcoin, like being on top of Bitcoin? I mean, maybe in the future it's possible that Bitcoin can be overtaken by Ethereum, but not Ethereum, which is the highest demand asset. Not even Ethereum reached $600 billion. I don't see PulseX going to $1.43 trillion. So $121 billion, of course, I can see PulseX going to one. Of course, it'd be like on Uniswap on the first page of market on coinmarketcap.com. It'd be right there on the first page. It'd be right below or above Uniswap. He has to. If you ask me, I would say that PulseX can be above Uniswap for real. Like Uniswap, like because PulseX has better tokenomics, is more attractive to investors. Of course, it doesn't have the single liquidity pool right now being provided, which is something that they're probably working on the back end. But that's something that's gonna be out there sooner or later because pulsex.com is a very brilliant decentralized exchange. So like I said, $10 billion. If you calculate the liquidity if you calculate 1 cent by the liquidity pool being provided by 2025, $10 billion in market cap, that's possible. That's really possible. More likely, if you calculate in the middle, but outside 1 cent times the circulating supply, which is 12.1 trillion PLSX, it'd be $121 billion. So that's more realistic. Like I said, the burn is going to increase and it's more likely to have a higher demand on this asset. The circulating supply is decreasing with the burn rate going up the more they trade. Remember, we're in a bear market. $93.3 billion monthly, roughly, being burned is going to be probably nothing compared to the months that we're going to have on the bull market. You know, we could even expect 200 billion being burned for 1 month on the bull market. And that takes a huge amount of the circulating supply out of the market. And this liquidity pools is going to be drained out, this PLSX, for other assets because investors are going to want it, you know? So, like I said, PLSX liquidity providers are not going to want to also have big, huge permanent loss. I mean, this is crazy. I mean, this is gonna be very interesting what's about to come. Please leave a comment in the description below what your thoughts are. I could go on a rant forever on this asset because there's so much to it. Like there's so much to it. So this is it for me. Like, leave what you think on the comments in the description below. If you think that the market cap for this asset should be multiplied by the circulating supply or the max supply or the liquidity pool supply, please let me know what you think in the description below. Make sure you subscribe and like. Thank you for bearing with me here. we'll take a look at the third video, which is gonna be concentrating on the demand for this asset. Thanks for watching. It's a long video. Take care, guys. Peace out.